And if you look at the current structure, this is the 1 hour time frame, and one thing we have observed and we have been able to be part of is this bearish momentum that started this week. Remember, at the beginning of the week it was initially indecisive as we saw price action continue to range within a flat channel just right within the $77.20 area and the $76.50 level to give us a level of indecision in that market at the start of the week. And you all know what we look out for whenever we have this kind of flat channel. We want to remain patient, look out for either a breakout of structure, that is the breakout of that resistant line, or the breakdown of structure for trading opportunities. So with our stop orders placed at both ends, we had our sell stop order triggered at the breakdown of the $76.50. That was early on Monday, and price action continued to move to the downside. And during the live session on Monday, I also identified a structure here at the $75 area, which was initially a buy zone a couple of days into the end of last week trading session, and we said we want to be seeing how price action will be reacting to that $75 level to decide if we are going to be buying or selling the US oil. And in fact, it was a beautiful signal for us as we saw price action breach that support line, breaking down that $75 area to trigger another sell position in this market. And we were lucky enough to be part of this move all the way into the $72.50 level, where price action hit our TP target. So as at the first day of this week, we were already profitable on the US oil. Then we had this bullish momentum happen, which I also emphasized on Monday during our live session, where I said if we start seeing buy pressure around that area, we would want to be anticipating a bullish momentum. Though I wasn't part of this as I missed this opportunity, and for those who are taking advantage of that opportunity, it will have been a profitable trade for you guys. And one thing we observed following this impulse, this bullish move to the upside, it later turned out to be a retracement of that previous impulse leg that took over the market at the beginning of the week. And since then, price action had continued to find lower lows and lower highs. And to further emphasize the strength of the sellers in this particular market, we were able to connect a series of lower highs here, which resulted in the bearish trend line that you can see on my screen right now. And after connecting the lower highs, we have the bearish trend line, and it is quite obvious that price action had consistently and uniformly respected this bearish trend line since the beginning of the week. And one thing I stated here yesterday is the fact that we shall continue to use this bearish trend line as a yardstick for trading activity for this week. And what do I mean by that? As long as price action remains below the bearish trend line, this will be a beautiful situation for us to remain bearish in this particular market. So unless price action breaks above the trend line, we want to remain bearish as long as price remains below the structure. And something interesting happened during the later part of the New York session yesterday. Remember, we had a sell position to be triggered around this area yesterday, and we said a breakdown of the $72.50 level will definitely be welcoming additional position in this market. I will be sharing with you in a moment the importance of that $72.50 area, but for the sake of this one now, let's quickly talk through this. And what we saw here, as soon as price got into the $70.90 area, we started seeing some buy pressure resume again, which I'm of the opinion that this is more or less a retracement of that previous impulse leg that we had here. And price action came back into our entry zone at the $72.50 level, transitioned into a consolidation phase, which appeared to have broken down the structure and has also triggered another sell position here. If you are part of this one too as well, well done to you for being on standby to have caught that move. So the next thing we want to be doing following the sell momentum we have been enjoying since the beginning of this week, we want to be securing the current position by moving our stop loss accordingly to secure this current position. And from this current structure here, I'm of the opinion that around the $72 area seems most appropriate to secure this current position as we wait out and see how price action will be playing out in the next couple of hours. Now, with the situation we have here on the 1 hour time frame, and for the sake of those who are not part of our live session prior to this one, let's quickly run through the daily time frame so that we can have an holistic perspective into what is really going on in this market, so that we can come back to the 1 hour time frame and make our decision for today. So in that regard, I will be scaling up into the daily time frame. So let's quickly run through this and see what is really going on from an holistic point of view, after which we shall be coming back into the daily time frame, into the 1 hour time frame, sorry. All right, so we are right on the daily time frame now, and this is what we saw. We have been seeing this structure for quite a while now, for those who have been part of the monitoring of the US oil commodity. And in fact, we can see here that price action has been bearish, and in the last 7 to 8 months, throughout the second half of last year, we saw our price action has been finding lower highs, and when we connected a series of lower highs here, we have a bearish trend line, which further emphasizes the strength of the sellers in this particular market. However, if you zoom into the current structure, that is what has been happening in this market in the last let's say 3-4 months, I think since the month of November, you will see that price action has been consolidating between the $83 level here, which has been serving as a strong supply zone, and the demand zone here at the $72 area. That is the range of that demand zone here. And in fact, this was the lowest point price has ever been in the last 1 year on the USOIL. Now, with the situation we have here, price action caught within a channel, this further emphasizes that there is an indecision in this market, and we were of the opinion probably a couple of months ago that we might likely be seeing a rise in the demand for the oil, which might increase the price of oil. But so far so good. Price has been doing the opposite here, and I'm of the opinion that the fear of a recession in the US, and at the same time the inflation rate, is probably suppressing the price of the US oil. Now, with the situation of things, looking at the current structure here, and after connecting the series of higher lows, you can see that price action has been buyers have been trying to break out of this channel, but this has been negated by sellers. As you can see here, all attempt by the buyers to break out of this channel has been negated at every point in time to push price further to the downside. And what happened since the beginning of the week, as you all know, we have been witnessing bearish momentum, which later and yesterday broke down that bullish trend line to negate the bullish trend line here. And at this point, this is more or less looking like a bearish signal in this particular market. But we cannot jump into conclusion at this juncture in the market, as we cannot just say, oh, it's a bearish signal, let's just sell right away. No, we can't just do that. Remember, we are sitting right at above a very strong demand zone, which has been existing for the last 4 to 5 months. So it's a very strong demand zone, somewhere right above the $70 area. And right now, looking at what is happening in this market, price is currently approaching that demand zone. Not, in fact, it's within the demand zone right now, and anything could actually happen. So at this point in time, remember I told you on the 1 hour time frame, for those who already have a sell position running, I have told you to move your stop loss accordingly to secure your current position, as we might likely see a sudden reaction anytime soon, as we are within a strong zone that has a strength for buying power. So right now we are at a significant structure. We are at a key level here, right above the $70 level. Now the question for today is, are we going to be buying the US oil for today, or are we going to be selling the US oil? Now, one thing we want to be saying to buy is, if we start seeing buy pressure resume around this area on our lower time frame, then we might likely be thinking of buying the US oil. But for me, if we are buying in the short-term perspective, it is more likely to be a retracement phase at this point. As you all know, price action just broke down a key structure here. We had the first key structure at the $76 level, which was broken. Then yesterday's session, we saw the breakdown of that bullish trend line here, to the downside. And we all know from a technical standpoint that whenever we have a significant breakdown of a key structure like this, we expect that one point in time price is likely going to come back, do a retest of structure. It could be the retest of the bullish trend line, or in fact it can go as far as the retest of the $76 area. But the most important pattern we want to be seeing here is selling pressure below the structure to incite another wave of bearish momentum to the downside. So this is one technical theory that is very likely to happen at this point. And if it so happens that price action climbs back above that structure, then we might be anticipating another wave of bullish momentum. Then another thing that could happen from this demand zone is that price action could turn out to transition into a trend continuation pattern. For example, a bearish rectangular pattern, breakdown, retest on lower time frame to incite a trend continuation to the downside. So these are the things we are going to be looking at when we scale down to the lower time frame. So we are going to be focusing on that area around the $71.50 level, which happens to be within that demand zone and right above that $70 level, which I told you earlier is the lowest point price action has ever been, at least in the last 1 year. So now with the information we have gathered here on the 1 hour time on the daily time frame, let's scale down to a much more lower time frame to decipher what our next line of action will be for today. Now scaling back down into the 1 hour time frame, so we shall be zooming our attention into the $71.50 level to see how price action will be reacting to that structure. And let me zoom this out a little bit so that we can see things more clearly here. So remember, we have this bearish trend line which has been supporting bearish momentum to the downside since the beginning of the week. So going on into the New York session today, we are going to be using this trend line as a yardstick for trading activities for today. So what this simply means is that if price action continues to trade below the trend line today, we shall feel comfortable in our sell position. However, a breakout of the trend line to the upside has a high chance of inciting a bullish momentum in this market. Remember that above the $72.50 level has been a strong demand zone in the last couple of months. So that's why we are going to be using this bearish trend line as our yardstick for trading activity. Now, when we scale down to a much more lower time frame, we begin to see things more clearly around the structure. So during the early hours of today, I was able to identify a simple setup here on the 15 minutes time frame. So let us look at the 15 minutes time frame together and zoom into the current structure. So that is the bearish trend line we identified on the 1 hour time frame. And look at what happened as soon as price came into the structure that was broken yesterday. That is the $72.50 level. Remember, price action was caught within a channel. And you all know what we look out for whenever we have this kind of channel. We want to see price action do a breakout, retest of structure on our lower time frame to join either a buy opportunity or a sell opportunity. And with the situation here, price action, the structure also shares a beautiful confluence with our bearish trend line. So this is more or less a sign that price might continue to the downside here. So a sell stop order below the $72.20 area triggered a sell position in this market, and since then price has been dropping to the downside. And in fact, we have about how many pips in profit from this level? About 70 pips in profit from this area. Please, I told you, for those who are in the sell position, ensure you've moved your stop loss to break even or probably lock in some profit, probably around the $72 level, as I have suggested, as we want to see how price action will be reacting to the structure. And I remember that we are sitting right within a strong demand zone, which we identified on the daily time frame. So right now we identified a structure at the $71.50 level, where we said we are going to be focusing on for today. Remember that structure, that price action was trading around the $71.50 level on our daily time frame. So I want us to zoom in and map out that price level so that we can position ourselves in such a way that we can catch any trading opportunity if we can identify a tradable setup at around this level. So for the sake of clarity, let us label this. So we have the $71.50 level. So that is already clarified there. Now we want to see how price action is going to be reacting to the $71.50 level to incite a trading opportunity in this market. So one of the two things we could see from the structure is buy pressure could resume in such a way that price comes back to do a retest of the $72.20 level, which was broken during the early hours of today, or retest of the bearish trend line, which has been supporting bearish momentum since the beginning of the week, to incite another wave of bearish momentum. Or we could have a situation where a trend continuation pattern around this area could lead to the breakdown retest of the $71.50 level to incite another wave of bearish momentum to the downside. So this is what we shall be looking forward to in the next couple of hours to see how price action will be reacting to the structure. And if you could afford to risk a stop loss of about, let me see, a stop loss of about 70 pips, because if you want to be taking any trade around this area, you want your stop loss to be somewhere right above the $72.25 level. So if you can afford to risk around $75 stop loss on this one, then you might want to be having your sell stop order below the $71.45 level, just right below the $71.50 area here, to trigger another wave of bearish momentum to the downside. So these are one of the things that we want to be looking out for at this current market structure to decide buying or selling at this point. Then another structure we also need to take into consideration here is this level, which is the lowest point price has ever been for this week, and that is the, let's see, $70.90 level. So I will label that area for the sake of clarity. So we have a $70.90 level here as well, which also has a potential of breaking to the downside. If it so happens that we have price action break down that structure, then we definitely want to be adding more position to our existing trade. So let's see what happens in the next couple of hours on this one. So let's see how that plays out on this one. If you have questions, feel free to drop your inquiries in the comment section. And whatever happens around the $70.90 area, if price action goes that far, will be determining what will be happening during the later part of this week. So if buy pressure resumes above the $70.90 area, we might be seeing a bullish momentum, and a breakdown retest of that structure will be welcoming a sell continuation to the downside. So let's be on standby for all these opportunities that we just identified here. Now going back into the 1 hour time frame, so one thing I always like doing is that I always take into consideration the two perspectives in the market. So if we are focusing on one part, the possibilities of the contrary happen is also there. And the market is a fluid environment, and as traders, to make money off the market, we need to be as fluid as possible so that we can line up with the expectations of the market. So in as much as we are looking out for selling opportunities in this market, we cannot ignore the possibility that buyers could actually come in. And to what are we going to be looking forward to? What are we going to be seeing here to assure us that buyers have finally come into this market? So like I said earlier, I told you all that we have a key level, we have a key indicator here, which is the bearish trend line that we said we shall be using to guide trading activities for today. And I told you that as long as price remain below the bearish trend line, we shall feel comfortable in our sell position. However, if it so happens that price action breaks out of the trend line, and look at the trend line there, it also shares a beautiful confluence with that $72.50 level. That is the demand platform that we identified earlier on the daily time frame. So if a breakout of the trend line happens at this point, that is, price breaches the trend line, then this will be a signal that the trend line may no longer have the capacity to continue to hold that bearish momentum. And remember that we are not going to be jumping right away into that structure. If that happens, we want to see some confirmation to give us that leverage to join that rally. So we want to see a retest of structure. It could be the retest of the trend line, hold the retest of the $72.50 level, buy pressure above the structure on our lower time frame, after which we can join a bullish momentum to the upside. So this is what we are going to be seeing here to ever think of buying the US oil. So at this moment, I'm still holding on to a bearish bias, and I'm thinking price might likely go further, breaking down that $17.90 level. But if the contrary happens, where price action takes us out of the sell position we are in right now, break out of the trend line, then we want to be getting ready to buy. If you have questions, feel free to drop your inquiries in the comment section, and I hope you have screenshotted my screen so that you can use it as a reference point when you're about to make your individual decision.